Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Nicole Dines and Paul Strome. And one of the stories that I thought was interesting from last week was the Commerz Real Climate Impact Fund reaching a €1 billion milestone. This week as well, CBRE investment managers and Forum Mobility announcing a $400 million joint venture, which is targeting electrification of heavy-duty port transit, so the sort of container trucks. So again, we're beginning to see substantial capital beginning to move towards that electrification side, both on the infrastructure and the real estate side. Nicole, what stories have caught your eye over the week?
There are quite a few. It seems that activities definitely started again in the market after the sort of Christmas break. In London, there's a massive new project being started. It's a £3.5 billion project for a Docklands new town. It's a Silvertown partnership led by Lend-Lease, and they are hoping to transform one of London's biggest remaining sort of derelict sites, which was the Millennium Mills, so old flour mills that have been derelict for about 40 years, into a sort of buzzing new scheme with over 6,500 new homes and creating 10,000 jobs. And half of the homes Lend-Lease is promising would be affordable. Now the plans have been submitted to Newham Council. We'll see whether they get approved. But if it happens, that would be the last piece in a vast jigsaw puzzle of that massive regenerated area in East London. Elsewhere in London, in the very trendy area of Shoreditch, the Office Group company, which is a specialist in sort of flexible office space, has opened London's tallest mass timber building, which was built from scratch, from the ground up. It has 28 offices, about 500 sort of flexible desks. And the interesting thing is built totally with renewable materials and construction methods, and embodied carbon creation was reduced by 37% compared to a concrete building. And of course, in line with what offices need to have now, it's got lots of amenities, meeting rooms, breakout spaces, and of course, the inevitable yoga studio. So it's a very sustainable building. And apparently from people who've been there, said the most amazing thing about the building, apart from the space, is this fantastic sort of healthy nature smell of wood going into the building. So that's clearly something that companies are going to look at. And deals have been happening in Europe as well, not just in London. Azora, the Spanish group, consolidated its position in the logistics sector. They've invested €100 million in 8 assets in Spain, 7 in Madrid, 1 in Barcelona, for a total of 90,000 square meters. And Azora has really been focusing on metropolitan areas and on last mile assets, which they believe provide the best value for investors. Elsewhere in Germany, the International Campus Group, the specialist student accommodation company, has completed the acquisition of a portfolio of 5 assets from Allianz Real Estate and CBRE Investment Management. It's one of the largest transactions in the sector of the last few years. And the five student apartment blocks are already operating under the Fizz, which is one of International Campus's brands. And now they've been acquired, they will be upgraded, they will offer more amenities and more services and more community spaces for students. Some companies are looking beyond Europe, such as Patrizia, the German group, that is strengthening its presence in the Asia-Pacific region. They've done a recent residential deal in Japan, and now they're consolidating their partnership with Mitsui, which has been going on for quite a few years, but they're launching now a new flagship discretionary sustainable infrastructure strategy, which assets under management of $1 billion. It's one of the group's largest ever infrastructure strategies in the region. And Graham Matthews, the CEO of infrastructure for Patrizia, said it's a real game changer for the company. And interestingly, it will target sustainable projects such as solar, wind farms, battery storage, and EV charging stations. So that would be interesting to watch. And another really interesting survey that came out this week by Verdantix, the independent company. They did a global survey, a global corporate survey, so hundreds of big companies in the real estate sector, most with revenues over $1 billion. It said over half of companies are investing more in their offices to encourage people to return to work. 60% in particular plan to invest more in staff health and well-being. This is the good news, but however, getting staff to return to work, it's come second to cutting costs for most companies. And only 29% of companies said that they plan to expand their portfolios this year. So there's still a sense of sort of economic uncertainty on a global scale in the sector.
I think it's been really interesting to see both that change in office, but also, again, some of the focus there, Nicole, around the infrastructure side. And I saw that in Ireland, Power Capital secured 240 million euros for solar projects. So again, we're beginning to see some of these things definitely coming through. Paul, what have you been tracking?
Well, interesting what Nicole was saying there about offices. The 2023 Investment Intentions Survey was published in the past week by INREV, the European Association for Investors in Non-Listed Real Estate Vehicles. It points out that almost a quarter of all investors plan to decrease their allocations to real estate globally between 2023 and 2024. Office, residential and industrial logistics remain, however, the preferred sectors for all investors targeting Europe. Nearly 70% of offices took the top spot. INREV said that the current fall in investor sentiment is sharper than during the COVID-19 crisis, and it's barely offset by investors planning to increase allocations during the same period. And the association said it indicates a muted outlook for the industry. INREV publishes the report in conjunction with ANREV and the PREA, its equivalent organizations in Asia, Pacific and North America. European investors are the most cautious, with 37% planning to decrease allocations during the period, compared to 20% and 5% respectively among North Americans and Asia Pacific investors. However, the average allocation to real estate globally is 10.2%, only slightly below the average target of 10.4%. The denominator effect, in which the value of other asset types has fallen further than property, making some investors technically over-allocated to real estate, is part of the explanation, and that tends to be among European investors particularly. The report highlights another change, that is that investors are returning to core as their preferred investment style for 2023. European investors are most risk averse, with 57% opting for core when investing in their region. INREV said that the preference for offices is possibly counterintuitive, but can partly be explained by non-European, particularly Asia-Pacific investors, identifying it as the sector of choice for Europe. Residential was in second place, owing to the high-end stable income and its strong counter-cyclical characteristics. Last year's top choice, industrial and logistics, slipped third place with 46%. So INREV attributes this to years of consistent outperformance, sharp yield compression and relatively high rental growth expectations. One sector that's thriving in the UK is the purpose-built student accommodation sector. And according to new research from Knight Frank, investment in the sector reached 7.2 billion in 2022. That was up 69% year on year. The firm's student property report it also points out that this volume is notably higher than the average of 4.1 billion for the previous 5 years. Now, we should point out that 4 billion of the 7.2 was invested in the final quarter of 2022, and 3.3 billion of that was attributable to a single deal. That's Greystar's purchase of the Student Roost portfolio for 3.3 billion. Knight Frank points out that despite a growing supply pipeline, student numbers are outpacing future supply because of current difficulties such as concerns about inflation, shortage of skilled labour, increasing finance costs, and the supply-demand imbalance is underpinning rental growth, which could exceed 5% in the 2022-23 academic year. Other residential sectors are available, as Axa IM Alts reminded us, in Spain, where it has just got planning permission to develop a 540-unit affordable housing development in the Tetuan district of Madrid. The development, which is expected to be complete in the last quarter of 2024, will comprise 2 24-storey blocks with other amenities. Axa IM Alts head of transactions and developments for Iberia, Esther Escapa, said that, like many leading European capital cities, Madrid has an acute undersupply of affordable accommodation, and particularly in the central areas.
Yeah, it's interesting to see, Paul, some of those trends picking up as well, the office, but also that affordable housing side. I noticed just in terms of the people moves, Will Rowson joining Henley Investment Management. And also at the same time, I noticed that they were announcing an acquisition along with co-investment partner Invesco Real Estate into Grade A office building in central Amsterdam. And also on the people moves, I noticed Luke Dawson at Colliers taking on an extra global capital markets role there. Patrick DeBart as well, heading up sustainability at ASR Real Estate and also joining the Impact Editorial Board. Congratulations to everybody on those moves and welcome to the Impact Editorial Board, Patrick. Thank you, Paul. Thank you, Nicole. Thank you for watching and look forward to seeing you next week for our regular roundup of the real asset markets.